Thank you for joining us here for Game Plan Sunday. Today is December 15th, 2019, and we're going to take a look at what occurred over the markets for the past week, what we noticed coming down the pipeline, and how can we use that information to, generate some money in the markets. Okay, so last week was actually pretty interesting because if you ask me, that was the Christmas rally. All right, so last week the stock market got everything on this wish list completed last week. Okay. The main themes that occurred over the past week was we had the Brexit deal, right? The Brexit deal came through, the Conservative Party won, and that just basically is a clear path for Brexit to separate from the Union next year. And that was something that Wall Street was expecting. And for those that don't know, Conservative Party, they're like the Republicans on this side. So you got Republicans in America and basically the Republicans over there, they won, all right? So then you also had we had the Feds. We had the Feds, Federal Reserve, and they basically came out and they didn't, touch interest rates. They left them the same. And they was actually accommodating the markets, letting them know, hey, we're here to, accommodate the markets. We're not going to raise interest rates. In fact, Powell was saying how he's not going to raise interest rates until we hit that 2%, inflation target and sustain it and actually over the 2% before they even think about raising interest rates. Because if they raise interest rates, the whole system is going to come, flopping down dramatically. So they can't have that. So Federal Reserves, they, mentioned that. And then Christine Lagarde, as you guys know, Christine Lagarde, she's the head of the ECB. That's the European Central Bank. That's their Federal Reserve, if you will. And she's equivalent to Jerome Powell. So she said basically the same thing. And that also helped the markets out. And then we had the phase one trade deal. So you guys know we've been waiting for this partial trade deal situation, and it finally came through and was able to actually leverage, that information. I could see the desperation here, was able to use that information to make some money in the markets this past week. That was pretty beautiful. So those are basically the main themes of last week. So that's everything that Wall Street was expecting, and Wall Street got all of those things. And the markets actually, they hit new highs, but it just really wasn't. It really wasn't anything special, though. So that's the interesting thing. And so I look here, markets at, last traded at 3180 on the S&P 500. We had 3188 at the highs. And so looking at the markets, what I'm seeing is, again, we've been talking about this theme here, that the markets are overbought. And so the prices are too high. They're really, really high. They're extremely high. This is not a good time to be buying for the long side, because it's due for a reset. And so it's actually overly due for that. And that's been the thing here is, treading softly. Looking at the S&P 500, as you guys can see, let me try to bring it down for the Facebook crew so they can kind of see these charts a little better. Again, if you're not in the chat room, then you can hit the link and join the live chat room. You get better screen real estate so you can see everything better. But when we take a look here at the broader markets, and again, what's good, Matt, Demita, Victoria, everybody on the Facebook crew side, make sure y'all hit the share buttons and likes and everything. So that the algos can pick up. So as we look at the S&P 500, again, these levels are really, really overbought. And this whole move is really, it was built up off of the trade deal situation, rumors of the trade deal. It never happened since October. You guys can see since October to now, all of that has came from talks of a trade deal, and it just never solidified. And so even right now, we're still waiting. We still have nothing in writing. But it's supposed to be here. It's a phase one. And there's really nothing. Let's actually talk about that for a second. There's really nothing in the phase one trade deal that is positive for the markets. In fact, the phase one trade deal was really a desperate move for Trump. And it's a huge sign of weakness in this trade war against China. Because basically, the only thing it did was secure the farmers, right? And you guys know the farmers are going through hell due to the trade war, right, that Trump bought on. And so they're not in a positive, space. And so the trade deal is kind of like a stimulus for the farmers to kind of help them, because China is agreeing to, buy more of those things. Right. And so, I mean, you still got to see if China's going to actually do it. Right. It's just in writing. It's not in execution. So you still have to see if they're going to uphold their side of the deal. So that's pretty much the only thing that came from phase one. And it's supposed to be a 4-part trade deal. Okay, now it's supposed to be a whole trade deal up front. Then it broke up to 4, and then again, it's ridiculous, right? Because it's going to take years to see this thing through. But it's all about mind psychology, getting people rallied behind, just BS. So anyhow, that's what the phase one trade deal was about. And then also that China will actually, help out with the intellectual property stuff that they've been dealing with Chinese companies stealing U.S. technology, getting it out in the markets before U.S. technology, killing U.S. companies, basically. And that's real, okay? Like, I've actually, shopped straight from China. And when I tell you man, listen, China is probably 10 years ahead of us. That's all I got to say, right? They get stuff out in the market so much fast. Like, there's no way that you can compete with China. I mean, point blank, China's buying up Africa right now. A lot of talk about even Africa is paving the way for the future, but China is overly populated and everything, and they're shifting down to Africa. China is moving. China's buying metric tons of gold. They got cryptocurrency that they drop, and they're going back buy gold. I mean, China is Trump and them trying to slow it down, but I don't think they can stop it. They can try to slow it down. And basically, the narrative is that their economy is hurting so bad that they want to do a trade deal. What positivity really came from this trade deal? It's just for the stock markets to print new highs. They also talk about they giving access, to China's markets to investors. So investors can now participate in the Chinese markets. They already been participating in the Chinese markets. They're actually moving to China. So, I mean, again, phase one trade deal is a no-go. It's just a print for the market. So at the end of the year, Trump will be able to say, hey, I got this economy great. The stock market is hitting new highs. Your 401ks and everything is great. This is all to secure the 2020 election, because he's going to actually, he's got to brag about it. He's going to go down this track sheet. And how can you argue the numbers, right? So that's what this whole ordeal is about. And so, again, that's, this whole move is really fake. The economy is actually weak. Forecast for next year is actually even weaker as well. So you got to keep this stuff in mind. But the key factor is the Feds have actually been injecting billions and billions of dollars in the markets. So that's the thing that people don't see. If you're not familiar with the financial markets, then you will not know these things. And this is what we do here at Wallstreet Jackboyz that nobody else do. Everybody's on trade, but it's bigger than that, right? And so not only do you have to be, you don't have to be a trader. You could be someone who's not even a trader, and you can get some wisdom from what we're doing here. So definitely invite your friends. So anyhow, that's what we've been seeing with that, with the trade deal situation. But again, it's really nothing. It's just for the prints. The markets want those highs, right? Hit those new highs to support Trump's 2020 election, basically. With that being said, all the good news for the year is here. That's what I'm trying to get to. And so we basically have a Christmas rally before Christmas. Now, can this rally further into Christmas? Yeah, that's what they want. Everybody wants people in the Christmas spirits. Okay, so the Christmas spirits, meaning that they need you to be happy and they need you to be confident in the market so that you go and spend your money. Now, I tell you guys often about social indicators that you can actually go and witness yourself. That means go through your neighborhoods, go through your local markets, and just actually see what's going on. And so anyhow, this weekend has been very busy for me. I don't know about you guys. Not even Christmas shopping, but just getting in the midst of having to go and get things. My sister had a baby here, and one of my best friends, son's birthday party, and I had a lot of things going on. So I had to happen to be out shopping, and the malls are packed. Really, I mean, the malls are jam packed. I actually hate it because I hate being in congested traffic. I hate being in congested stores. I normally order on Amazon. I mean, listen, shameless plug. My wife, she's probably gonna be like, man, why you tell them that? She just ordered some ice cream, from the local grocery. They're gonna deliver it to that. We order everything. I'm just, telling you, like, I'm not into being in crowded places and all that crazy. So anyhow, but when you go there, you can actually see like how well are these stores doing. And so you can see that the consumers are actually outspending money. Now that money may not be real money that they have to spend. A lot of people are taking out debt, as we can see in the numbers, are taking out loans and debt so they can go shopping for the Christmas holiday. That's what the holidays are designed for, so that you can go and spend your money. And so anyhow, we see that that's actually holding true. That's predictable. You kind of say, okay, well, it's Christmas time. People are going to be spending money for, Christmas shopping and things like that. And so you can go out and you can see those things. And so, that may be positive for the retail sector as that money starts to, flood in for those numbers. And so that'd probably be like, first quarter prints and stuff like that. So yeah, so you can see those. That's what I call social indicators. Look at that. That's right, Topaz. You too, Demeter. Yeah, I order, man. Listen, I was so like, man, traffic was ridiculous. I'm like, yo, why is traffic like, it's crazy. It's like in the morning time, I'm thinking I'm beating everything. Traffic is just dumb, right? Anyhow, so people are spending money. And that's what this economy is built up on right now. And so the confidence and the consumer spending is still good. So that's still a good sign for the economy. So the economy still got some legway, to go before we talk about a recession. So those are things that I've observed. OK. And then so, I'm looking at the markets at the same time. So we can actually formulate our strategy and things like that. So let's actually cut this small talk and let's get to these charts. All right, so taking a look at the S&P 500, only thing we did here was you took the swing high. Just took the swing high to the swing low here and got some extensions at these levels here. And then we have a second extension at the 3212 level, right? So 3200 is, if the markets continue to push higher, we can see it hit those levels. However, this is a key level of resistance, from way back to this swing down to that low that I had back there. This line here, it gives us a confluence, right? It's when they stack on, it's kind of like a coincidence. You say, oh, it's a coincidence. But if you put a coincidence on top of a coincidence, that's a confluence. It's a stronger signal. So as we see these lines stacking up, this resistance level is making a strong case for resistance, basically. Again, the markets are over bought. So these prices are in these range. In these range, you don't want to buy in this range, right? And you don't want to sell at this range. You want to catch the markets when it's, in the good pricing point. You don't want to buy at the high and then sell at the low, right? That's the name of the game. But we're seeing that because of the Feds juicing up the markets with liquidity. That money got to go somewhere, right? So that's what they're doing. Risk has been on. And so I just want you to see it from that perspective. I'm going to dial in on the intraday chart. Okay. All right. So as we dial in on the intraday chart, we see that the Fibonacci levels held true at this level here. We saw that we had the pop. This was from the trade deal situation. Then it fizzled down here, popped up, and it's trying to come back here. So I'm seeing weakness here. Doesn't mean that weakness is going to sustain because the markets are slightly up right now. And again, this is, tonight, slightly up. But when we look at the other sectors like the Russell, let me actually dial back. I got some sell triggers here on the Russell, and we can see how it's been overly bought. And I got a sell trigger that's here. Okay. Hit that high, tapping out. Now, again, it's still, still positive, but again, we have these overbought territories. And so we're due for a pullback. And so what we want to do is anticipate this pullback. Doesn't mean that we want to short because, again, it could still go to the long side. But what I actually want to look at here is because what I'm actually looking at, I see a setup that's in gold. Let's actually pull gold up real quick. All right. So this setup in gold is bullish. We're due for some. What's good, you guys? See you on the Facebook side. Sorry here. All right. I got you. Thank you guys for joining. Make sure I hit those share buttons. All right, cool. So basically, what I'm looking at here in gold, we've seen this the squeeze set up here in gold, and if there's anything negative happening in the markets, then that is going to pop to the north side. Now, the thing that I like about the gold chart is that it's at a point that investors would like to buy gold. Okay, if I can actually come back just a tad bit, I want you to see this real quick so you can see the idea, where the idea comes from that I'm talking about. Let me use my arrows here. So I mean, think about it this way. For this year, gold has rallied up. That high, and that's positive. And then we get the pullback, real nice, healthy pullback. That's a healthy pullback. If you think about it, from that's like half of its move, right? So it pulled all the way up here, and then say we retrace back about half of the move here before it makes another leg upwards. That's the way you normally see these patterns work out. Doesn't mean that it's going to work out that way, but because it's a pattern, this is the way that we normally see these things work out. And so that's what I'm actually kind of looking for to this week, to see if we can get some exposure in gold. And I would like to get some exposure in gold to play the counter side of the markets because, again, all the good news has already pretty much happened. The biggest news things already pretty much occurred here for the markets. And so we have, Trump's impeachment talks that's, also coming up this week as well. So I forgot to mention that. So, yeah, we had 2 articles of impeachment that was passed on Trump. And so I think this week they'll actually be, doing a full vote to try to get Trump impeached. That could be the catalyst that will make gold go to the north side. All right. So that's an event. That's a story. Right. And we see the charts also to support the idea. It doesn't mean it's going to work out. Sometimes I get it wrong. I don't want anybody to think that I'm perfect because I'm not. But I'm pretty good at what I do. I think that everybody can agree. So because that is on that risk is still in the market. But Wall Street hasn't really played much to it because Wall Street also understands that it's got to go through the Senate, and the Senate has already said that they're not going to go for it, and they're controlled by the Republicans. So how far can they really get with this, right? But again, it's going to, cause some friction in the markets nonetheless. All right. So I like idea in gold. I do have my gold list up here. If you guys can see this list of stocks, these will be the setups. You can find setups in any of these here. You can find setups in any of those. So this is the futures. If you go to GLD, if you go to GLD, this is a good ETF that you can play. Okay, for this setup here, right? Boom. Let's try to see it hit that bounce. Do have a little buy trigger here, and we got the squeeze present. We got trend is up, momentum is starting to shift up. All right. So you can also look for that one for some exposure to the long side. And then there's another nice setup here, and let me see, and the GDX, and this is on a weekly chart. So if I take you to the weekly chart, you can kind of see this bull flag stands out, right? What's good, Ashley? How you doing, Marcy? It's good. Yes. So if you guys see this here, and I know Ron, where my man Ron at? Ron, I know you see this pattern sticking out. It's screaming at you. We're Topaz. Topaz, I know Topaz see this pattern sticking out. So anyhow, you can see, this is a bull flag here, right? And so, that's a bullish pattern, right? And so this is how we play it, right? And this is on a weekly time frame, and we got a squeeze in there. See, the momentum is shifting up. You see that, and then we got a buy trigger here. So when I look at the bigger chart, that's pretty much what I'm looking at, right? And so that's, again, that's clear as day. I do like these ideas for this week for some downside pressure on the equities because they're due for a pullback. Doesn't mean it's going to happen, but if it does, you want to be positioned in these stocks here. So you can take a look at all those gold stocks that I got over there. Also, you may want to take a look at the utilities. All right. So, yeah, also you want to take a look at utilities. It looks, pretty similar. If we dial in here, we got a squeeze on the daily here. And it's in a range where it's not overbought. It's not overbought or oversold. So it can go either way. But I don't have a case for it being, at an extreme level. So it has room for the upside, right? We can see we had a buy trigger here. So we can see room to the upside. We do have a squeeze here. Trend and everything else is up. We have this resistance level here that it's been holding true to. And so if the squeeze fires long, then again, we'll see it, come up. So yeah, I do like that to the long side as well. All right. Now, let me actually give you something on the equity side. If you're looking to play equities to the long side, I did get a chance to take a look here at Walmart, which is interesting. I think we've been talking about Walmart for a while here. This squeeze has really been extended. You guys know I hate playing extended squeezes. We don't really like playing the long squeezes, right? But nonetheless, setup is still on. And after what I just told you guys about my reports in the market, I haven't been to Walmart, but just looking at how the malls have been, Walmart is pretty much going to be probably packed. If you guys, anybody been to Walmart lately, seen Walmart? I don't know. I don't really shop there, but I'm pretty sure they will pack. Ron said yes. Okay, so yeah, I'm pretty sure they're packed, right? Because if the mall is packed, Walmart has definitely got to be packed, right? And they have good deals. So this squeeze setup is in Walmart. We do have a buy trigger here that says, "Hey, get in me now," speaking at you. Again, we do have resistance levels here at these lines right there. I want to see it, clear those as well. But this move looks like it's poised to go down. So we have a squeeze that's here, and then we got the trend that's going up. It's not overbought. So, I mean, all these levels are good. Just define your risk. But yeah, I do see some positive input here. And the fact that people are spending money, we're physically seeing people spending money. So we know it's spending. Walmart is going to take a large share of that money that's been spent. So yeah, Amazon isn't taking the whole pie. For those people that think Amazon, like I'm an Amazon shopper. You guys know this. I don't mind leaving the house. But Walmart is actually going to make some money here for the holidays. I mean, again, that's what the holidays are set up for. It's the fourth quarter push. These companies got to get this stuff, the prints for the fourth quarter for 2019. So, yeah, Ron said Walmart was crazy. I bet Walmart was crazy. I mean, it's Walmart, right? Wally World. What do you expect? So, but yeah, I mean, that's pretty much what I've been looking at here. Let me actually take a look at gold, and then I'll take some ideas from you guys, and then we'll bring the session to a close. Have you guys been able to check out, I don't know if where Mia at? Mia, I know Mia for like, oh, you didn't tell me. I did drop a new shirt. I don't know if you guys see the new merch that's popping off. I got the new merch popping off that I put together for you guys. Hope you like it. I'll pull it up here in a second. Let me pull up oil for a second, though. Oh, Mia caught it. I'm like, I know Mia probably ready to cuss me out. You know what I'm saying? She got that Louisiana hot sauce popping. You know what I'm saying? I'm like, I don't want no smoke with Mia X. All right. So she said, yeah, she saw it. Okay. Let's see. Let's pull that up. Let's pull that up. It looks pretty good. I think I like it. I like it. I like it like that. All right. Yeah, here we go. Here we go. Let me pull it up for you guys. Bingo. New shirts popping. Y'all know my saying, take profits often. Like, that's something that you don't even have to be a stock trader to understand that right there. Coming from the streets, that's what you do. And so I take that whole ordeal, and that's what we do here in the market. You already know. Okay. But yeah, you can get them in your different colors, get your orders and all of that stuff right there. So bingo, you got your hoodies popping and all these for you hoodie guys out there. You got your different Mia. I got the perp. Mia like the perp. For those who don't know, she like it purple. Okay. If it ain't no purple, I gotta hear Mia, and Mia be in my ear, and we having issues, right? You got the sweaters too, for you Christmas people, like your Christmas sweaters and all that. So anyway, take profits off, and it's a new design that I put together. I hope you guys like it. But you can check it out. It's, right on the website or what have you. If you need a link, I'll drop a link here for you guys so you can get that. Take that. Like Puff Daddy says, right? The interview, I'm telling you, y'all got to check out the interview, man. Just check out the interview with Puff and tell me what you guys think. Was it a photo op or was there any value? Was there any value, right? Okay. Because there was no value at all. Anybody could tell Puff that you need to hire people to do the job for you, B. Like, why are you trying to do everything? Okay, that's arrogant. Don't be arrogant. Anyhow, so there we have that. And taking a look at oil here. Oil has had a nice little rally. But I think that the rally in oil may be coming down just a tad bit. Now, oil is it's in a positive territory, which is interesting. Because I'll tell you guys a secret about oil in a second, but let me just actually assess the chart for a moment, where we are basically looking at oil trading above its averages. I know I got a lot of lines in here, but if you can just follow me for a second. The price itself is trading above these moving averages. Okay, so whenever the price, that's stocks, then we have a bullish pattern. Okay, oil has been trading under this 200 moving average for the longest. You guys can see here. Trading negative under that, but then it's been rallying when they hit this low. It's been popping up, and now it's trading above its moving averages. Okay, so now it's trading above its moving averages. We can see oil going north. Now this is interesting. The reason why you need to understand oil. Anybody understand what's special about oil? I tell you. What's special about oil is that oil is a good indicator for inflation. Okay. What's good, Faith? What's good, Nakina, Ashley, Chakal, Mardicia? I see you guys. Okay. Make sure y'all leave your comments wherever you have you. We'll try to answer those. Okay. So oil is important because oil is another indicator for inflation. So you don't have to actually read inflation charts and stuff like that. But if you look at oil, you get a good indication of inflation. Now, what is the Fed's goal? The Fed's goal is to keep, to try to get inflation up to 2% and sustained at that level. You haven't seen inflation in a while. Inflation is dead according to the indicators that the Feds are using. Remember, they don't include energy, and they don't include the things that people actually need, food and energy. Those are the things you need. They don't include those. So if your food prices are going up, and it's just tricky. So it's a lot of people say that the numbers don't lie. What it is that people don't understand how to read numbers. And for those that don't know, I have a data science certification. I could tell you so many ways to manipulate numbers. But also in the interpretation of numbers, a lot of times they're not just one level. They can be like multi-layer or, a little more complex. You got to dive deeper into some of the numbers. And so when we talk about like these inflation numbers, right? And they talk about they don't see the inflation pressures. When you talk about price of goods going up, they can hide the price of goods going up. For instance, meaning it may not be that you bought, I don't know, let's just say I bought this cup and it has a price tag on it that says that it's $1, right? And you say, okay, well, this cup, you have to look at the fine details, like what's the size of the cup, right? So the size of the cup, how much water can it hold? And that's the value on the dollar, right? What they do is they cut the size of the cup down. You can look at the weight and things like that and charge you the same price. That is still inflation. I hope you guys caught that. That may be a little deep. Basically, what I'm saying is when you buy your little chips, your Doritos and things like that, look at the ounces, look at the weight, the bag, the prices. I think I was in a grocery and I looked at the chips and the price for the bag of chips. Like, how they got like the big bag of chips, like this, and then they got like the medium size, they kind of narrow, but they still kind of long, and then you get the little minis. We're not talking about the little minis. We're talking about like this size in comparison to this size, right? And I looked at the mid-size chips, and it was the same price as the big size. And I was like, well, hold on, why is that bag, the same, anyhow. But you go and you look at the ounces, the big bags, they have like a lot of air in them, and just bag, and it's like not even any chips, right? And so it's kind of like, and they do it to you like when you go to restaurants and things like that, they like McDonald's and stuff like that, they like overcharge you. They overcharge you on the small, and then they start to like cut the charges down on the medium and the large, and it's psychologically designed to force you to upgrade, because it's like, well, if it's only 29 cents, you might as well just go get the big one, right? Anyhow, so inflation is also caught in these kind of ways. And so I just want to bring that awareness. That's another social indicator that you guys can use in your real life. Again, has nothing to do with trading, but this is value in your life. So you can look at these things. So the inflation can be hidden in things like companies cutting back on the size of the material that they're producing, the weight and things like that, but yet the price can still be the same. Anyhow, if you follow that, let me know. Hit the like button, type in a Y, something, let me know that you understand what I'm saying. If not, then I'll go into further details, explain it to you. But basically, the Fed's goal is to get the inflation to go up. And the Fed is injecting all this money. That money has to go somewhere, and we're going to see inflation go up. Now, we may get hyperinflation, and that's not what they want. And that's what some of the bears are, anticipating, that, hey, the Fed is going to overdo this inflation thing. So anyway, that's interesting because we look at oil and we see oil that's going up now. All right. So that means that your cost of your gas and cost of everything, cost of the goods to get to you is going up, and those costs are passed on to consumers. So that's what I'm basically trying to say here, is that we may actually see these inflation numbers starting to rise now, since oil is rising above these numbers. I don't have any setups in there just yet, but oil may get some pullback. It hasn't yet cleared this resistance level, so we'll see. I do have some bigger targets up at this level here. So the oil market, according to my Fibonacci here, it wants to hit around the $65 level. All right, so that's what I'm looking at for that. You say you bought a candy bar. It's like what the, exactly. So Ron, he understands what I'm saying. Cool. All right. So with that being said, that's what I'm seeing here for this week coming up. I'll take some ideas from you guys, and then we'll bring the session to a close. All right. What y'all got? Anybody else got anything? Experience was good. Kareem was good. Mia was good. Ron, anybody got any setups that we can look into? All right. You like okay, so you like MasterCard. Okay. Adobe. Let's check out Adobe from experience. Let's see what we got here. All right. Okay. Pretty interesting chart here. Dial it back on the weekly chart. All right. What I'm gonna do is take my Fibonacci assessment here. It's blown through these bottom levels, obviously. So then we'll redraw these here. Let's take it from that high to that low. All right, cool. This is how we use that tool. All right. And so again, this is in a nice territory. It's a bullish chart. I do like it to the positive side. Got a cup and handle set up also. I don't know how you felt that with experience. You've been studying. Experience been studying, you guys. He don't talk much. You've been studying. He got this nice cup and handle. This is something that Ron normally brings to the table. Keep in mind, you got this resistance level that's up ahead up here. And so this pop blow off has looked like it's coming from earnings report. Looked like they had a really nice earnings, and it has a nice pop up. No, normally when you see these pop ups though, they start to fizz out when they do that. Popped up, price came down a little bit, closed at this level, and they'll normally start to form like a little flag, right? And so normally what you may see a flag formation in this one here. I do have Fibonacci targets up at these levels. We do have a buy trigger that says to get in, okay? But you still want to actually see what is going to play out tomorrow. So I think tomorrow we get a little more confirmation in this one here. But I do like it to the positive side. So that's a good one. What else? MasterCard. Bingo. All right, sure. Got some levels here, MasterCard. Let's get the new levels popping. Bingo. That swing high to that swing low. Now we'll go in on an enter swing. Bingo. We see how the price action respects the Fibonacci there. But it may disrespect it because it has basically a $300 target up ahead. So it was a doji on this one though. So Friday you had this doji here. So it may come back down. Now, this is something to be careful at this rejection level, at this resistance level, excuse me. But this is a good target here to the upside, okay? And then this is your risk to the downside, all right? So that's how you assess your risk on that, all right? If you see that thing, if you get in, you see it come down here, the no-go. But if you are to get in there, you see strength, and you see strength coming in tomorrow, then, look at that target here, about $300. That's where that stock wants to go. So I like that to the upside as well. What else we got? Docu. Daily. All right, DocuSign. All right. Been a while since I charted this. This is another bullish chart, obviously. But do we have a setup in here? What are you seeing in this one, Ron? Seeing that it came down here. You're looking for a quick trade? I don't know. I got some different signals in here, so I'm not too sure about this one here. Got that down trigger here, which it could have been here. It came back to the 9, but I don't have anything else really to support more pricing going to the upside in this one. I don't know. I don't like this chart for right now. Doesn't mean it won't play out, but I just don't have any clear signals on that one. What else we got? What's your take on McDonald's, Kareem? Okay, you like McDonald's? All right, good. There we go. All right, Kareem. So good one. McDonald's is also, this is an interesting one because again, it's trading under its moving averages, but we do have a floor that's here at this level, right? So McDonald's, excuse me, actually put that back here. So the floor is right here at McDonald's. We see how the price action came down. Again, this was at the 50, it broke. This was at the 100, and then it broke, and then the 200, and it broke. And then we had these levels. And so it's trading under its moving averages. So this will be a counter trend trade because I do like it to the upside, but it's a counter trend trade. So counter trend trades are a little more difficult because it's trading under its moving averages. So it has more resistance levels to break through going up. And so that's interesting. Just looking at the charts, just using the moving averages here, about $200 is a easy target that you can see here, right? This level here will be the most resistance at McDonald's. I do like it to the upside. And this is a good price point for investors to buy in at. If you take a look at, hey, what are they willing to spend on McDonald's? Obviously, somebody's buying at $221. So we already know what the market would take it for. If I can buy this here at $195, right? That's a good deal because it's on its way back up, right? So I like this to the upside. But it's a counter trend trade, so just understand that that's a little risky. Let me see if I can get some Fibonacci levels to confirm what it is that I'm looking at. I like to use the Fibonacci's to confirm my ideals. And if that doesn't work, see, I have no levels on that one. And if that doesn't work, then what I do is we'll pull up my handy dandy voodoos. All right, so this may work out for me to see some levels above that. What I'm going to do is actually go to the Voodoo real quick, see if I got some levels here. Oh, I need a nice update on the Voodoo. So I don't have any levels on the Voodoo. But on the intraday, you can see this is what I'm going for up here around a $200 target. This is what I would like to go for here. About the $200 target here. So, yeah. Again, I like it to the upside. It has a nice floor here. It's been going up since those floors. I do like that. All right. To the positive side. And let's see what the volatility levels on that is at. Volatility is pretty low as far as what we can see. We could actually probably throw some calls on that one. All right. Okay, cool. So there we have it. We got some ideas going into the week. Got a couple of themes to be looking forward to. Remember, the articles impeachment situation with Trump, I think it's probably going to be like the biggest catalyst for whatever occurs in the markets this week. As far as the economic information that's released, we got some housing data that's being released. I don't see anything else really in the forecast that's major. We just got some housing information, some housing data, but that doesn't really move the markets that much. And so, again, we'll be looking at pretty much that. We got the BEA reports, Bureau of Economic Analysis, on Friday. And they're just talking about consumer spending in November, personal income and spending. So we get that data. But other than that, I don't see anything important, really. All right. So cool. With that being said, we'll bring the session to a close. Thank you guys for joining us. Check us out. We'll be back next week before the Christmas holidays. And then, we'll be back 2020. All right. So, hey, make sure you guys tell a friend to tell a friend, spread the good words. Make sure you subscribe to the Instagram page. I'm actually putting out content on Instagram. So you guys make sure you check that out. The Facebook page, the business page. Make sure you guys leave reviews. If you learned anything, if you got any value, leave us a review so that the world can see, hey, we do this for real. It's a lot of people that's out there and they have thousands of subscribers, hundreds of thousands of subscribers, and they're very generic. Buy stocks. That's generic stuff. We get very specific, like when Kareem would say, hey, what'd you think about this stock? Hey, we go and do a full analysis on that. And, that helps you to, make a better decision. OK, so anyhow, with that being said, you guys have a good night. We'll be catch up in the markets this week. All right. Peace.